And my last one is have fun, because life is short, and if you're not having fun, then you're wasting away an important part of your life. So whatever you're doing, whether it's business or studies, you want to make sure you're doing something that's really enjoyable, that you can have a lot of fun doing. So that's really it for me. I have a slide with my contact information. So I really appreciate your having me here. This is quite an honor and a lot of fun for me. And I'll stick around as long as you need to answer questions. You know, once again, thanks for having me.
Thank you. Questions? I know you have a lot.
Go ahead, Sonny.
First, thank you again for coming.
Sure.
I really appreciate it. So as you probably know, there's a lot of innovative startups with fascinating ideas and technologies, and probably only a subset of those, for example, gets picked up by PE or VC firms that seem interested in it. However, based on our readings, theoretical in a sense, this maturity process, as we learned, can also be viewed as the beginning of the death of the innovative startup, simply because the VC or PE starts imposing their own rules, or the bureaucracy or the red tape that you mentioned. Given your VC and various managerial experiences, what are your thoughts to this theory? And assuming that it applies, how have you addressed it with your investment in those systems?
Okay, so I think it's a good theory that it's a good hypothesis, and I agree with it actually, which is that if you get people who are not experts in your niche trying to tell you, the expert, how to be an expert in the niche, that's not a good recipe for success. And usually venture capitalists tend to be generalists. They understand enough to be dangerous, but they don't have deep domain expertise or experience. So the key, in my mind, I think, is to find, if I were you, is to find a VC who is open-minded and who is willing to let you, do what you want to do. He's investing in you and your idea, that the VC is, and they're not investing in your idea so they can change it. They're investing in your idea so they can make money off of it. It's hard to find that kind of VC because there's not a lot of them exist, but there are some great ones out there. And the key is to find that great VC who has the ability to control themselves, really. Because at the end of the day, these VCs are very smart. They're really smart. Maybe they're not smart at programming or code, but they're smart at business, or they're smart at financial structuring. So they're very high IQs, and they probably have an idea. Oh, okay, maybe I can help you solve that problem, and that's where they're going outside the boundaries of their own expertise. So I agree with you there. As far as lore systems goes, I am not I don't have a master's degree in computer science, so I've had to restrain myself too, and basically focus on things like customer care, financial structuring. We're looking at acquisitions. I can speak from a higher level, so I can do basic. I'll give you one example. Lore Systems was doing. When I bought the company, we had 7 or 8 product lines. So the first thing I did was, for 7 or 8 product lines and 350 customers. So the first thing I did was saying, okay, let's get rid of some of these product lines because we've got to focus. And so I brought that to the table. I didn't say, well, you're doing that particular virtualization project wrong. So I wasn't able to do that. And actually, I brought some stuff on the company, which I'll share with you guys. I got a general corporate capabilities brochure and some other brochures on our professional services offering and some data center hosting stuff. Just, you guys can keep them or review them if you want. Here's another one of those. There you go. So, did I answer the question?
Yeah, you did.
Okay, good.
Okay.
Sure. Yes, sir.
When you talked about recruitment a little bit, and I was wondering, kind of going off what you last said, how do you deal with recruiting when it is outside of your core, like competency? You're looking at, you need engineers or you need people that, like the people that develop the algorithm for your call center.
Yes.
How did you find those individuals?
That's a great question. I'm good at hiring, and my team, I'm pretty good at hiring for culture. So I can tell, I can ask the questions and spend enough time with somebody and figure out sort of what type, what drives them, what motivates them, what kind of person they are, what kind of passion they have, what interests them, or whether they're hardworking or not. I can't really figure out the integrity piece as much, but I can guess at that. And as far as their technical aptitude or their technical expertise, I have to have our own technical staff run the interviews. And what we do is we put people through a set of interviews. So we have our CTO maybe meet, or a VP or Director of IT meet each person, and they have tests also. There's actually some tests that they use to, in other words, we hire Cisco certified staff. So if someone has that designation, and we will actually drill down on that to make sure that they do have it. And our CTO, one of his favorite things to do is to play Iron Chef with these people, give them a bunch of ingredients and tell them, go fix this. Or another question he asks is for some of the infrastructure guys, do they have their own networks at home? 90% of them do. So then he'll start asking the questions about their networks and how they do certain things and how they fix certain things. But he'll set up a laboratory arrangement. So in the conference room, he'll put some equipment in and say, okay, well, this is the problem, go fix it. And you've got, 1 hour. And that's sort of a practical examination. So, but it's not easy. How do I hire a financial person too? It's the same thing. I'm not an accountant, so I have to rely on outside, bring in my outside CPA firm partners to interview the candidates as well. And I'll interview for the culture, see if they're going to be a good fit, and then they'll interview for their technical expertise. Sure. Yeah, Jen?
Yes, so I read from the slides that you basically sell the company to ACS at 03.
Yes.
So I think from the development of the company, it looks like in 03, the company has already been really big. And what makes you make the decision that you want to sell?
Mainly 3 reasons. One was a lifestyle decision. I had 3 small kids at the time, and was traveling a lot on my business because I had 9 sites in 6 different states. So I was doing a lot of traveling just to see my people and also to see our customers. So it was more to get more balance in my life. So for 12 years, all I did was work. And then the second reason was I did not want to open up operations centers outside the United States. I didn't want to open up centers in the Caribbean or in India, Costa Rica, Israel, South Africa. We were looking at those things because I was already on the road quite a bit, and I didn't want to go out and raise another $20 million to build, 2 more locations. I just said, what, we're a domestic company. Let's go find a buyer that already has offshore capabilities and they want to buy an American platform. That's how we kind of went through the decision like that. And the third reason was financial. We had not pulled out a lot of the equity in the company at the time. We had paid ourselves nicely, but we didn't make a big exit. So my partner and I decided this would be a good time to make some money and kind of close the chapter in that book and open up a new chapter. So that's why we sold the business. Yeah. Sure. Yes.
We were talking about disruptive technologies and how big companies succeed, and learning about successful technologies, but smaller companies fail more often. And we now some examples of why a company with a good idea, good technology, but fails, and what is it you think it might have caused them to fail?
Now, when you say good technology, what's your
A good idea, when I
definition?
say good, not good technology, a good idea.
A good idea, is the good idea acceptable to the market at that time? Because if it's a good idea but it's not good timing, that could be a bad thing. And if it's a good idea but it's not accepted, that could be a bad thing too. So, a lot of it, I would attribute some of it to luck. I'd say at least half of it. So a small company's ability to succeed, despite all of the odds or whatever, and part of that is the luck. And serendipity, however you wanna look at it, you know, it could be, not blind luck, but,
It just proves right.
you know, at least, good fortune that in some way. And then I think, I can't answer the other. I would guess it's execution. I would guess that the leadership and the sales management of that company, for some reason they didn't execute properly. And execution means they didn't price it right, or the business model was flawed. You know, look at what GEIS did, General Electric Information Services. They were the business-to-business ISP equivalent of AOL. And they didn't, AOL gave away their service, started giving away their service for free. Well, GEIS wanted to charge a lot of money. And that model wasn't good. They had subscribers, they were paying good money, but they had this whole universe of subscribers they could have captured for free. They could have gone to a tiered pricing. There's a free portion, there's a, you know, gold, silver, bronze, and free. They didn't do that. They just said, you either pay or you don't get our stuff. So, you know, maybe that was not a good, at the time, that was not a good strategy. So, and I think big companies tend to win because they have big capital. They have the ability to flood the market with millions of $9.99 CD-ROMs, saying, hey, come and sign up with us, or they can go on TV, or they can use their financial clout, marketing clout. Small companies, there's a lot of, you know, they do need breaks to make it happen.
So we could continue to ask our questions, but our